Hey, what's up guys, John here. A Berkshire Hathaway insider just liquidated over 50% of his entire holdings, over $139 million worth of stock. At the same time, Warren Buffett is unloading shares. Over $86 billion worth of Apple stock sold.
Buffett reported that his conglomerate has cut almost half of its position in Apple.
Look at what happened in Paramount. Sold all of his shares at a massive, massive loss. Bank of America sold over $7 billion in stock over the last month and a half.
Warren Buffett's selling spree of Bank of America continues with an unloading of an additional 24.7 million shares, totaling $982 million.
In just Q4, Berkshire sold $75 billion worth of stock. But the big question is why? Why are they all selling? Well, when you look at the job market, I'm going to show you what's happened in the job market over the last 3 days. It's unbelievable, and it paints a very clear picture as to what is unfolding inside of the U.S. economy. I'm going to show you what billionaires are really just unloading shares, what is actually going on. Because when you follow the smart money, you'll see things clearly. You have to ask yourself, when in history have you ever seen a time where the middle class gets rich and the rich they don't? It almost never happens. In 2008, 2009, 2010, the rich got a lot richer, the middle class suffered. Well, when you look at what insiders are selling, and I'm going to show you who they are and what they're selling, you'll see the odds are they're walking into a massive, massive buying opportunity. You want to be positioned with cash. You want to have great credit, stable income, low consumer debt. You want to be able to pivot and move and capitalize on some of these trends. You might not have $100 million, but maybe you have 10 grand, maybe you have 20 grand, 30 grand. You want to put yourself in a spot to where you can at least pick up some distress, because the job market, the economy, it's a red flashing light that's right on the way. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's happening in America's economy. If you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call tomorrow. Take a look at this. I mean, this just came up a couple hours ago. Ajit Jain, Buffett's insurance leader for nearly 40 years, dumped more than half of his Berkshire stake. The 73-year-old vice president of insurance operations dumped 200 shares valued at $139 million. Each share was almost $700,000, $695,418 to be exact. That left him holding 61 shares, which family trust established by himself and his spouse for the benefit of his descendants hold 55 shares, and his nonprofit corporation, the Jain Foundation, owns 50 shares. The move marked the biggest decline in his holdings since he joined 38 years ago in 1986. So he's liquidating at levels in which he never did in almost the last 40 years. Why? Why are they selling? Well, look at this. Came up today, Microsoft to cut 650 jobs at Xbox. Right? This came out, I believe this was yesterday. Exclusive. Samsung plans global cuts of more than 30% in some divisions, sources say. Samsung Electronics, the world's top maker of smartphones, TVs, memory chips, is cutting up to 30% of its overseas staff at some divisions, 3 sources with the direct knowledge of the matter told Reuters. South Korea-based Samsung has instructed subsidiaries worldwide to reduce sales and marketing staff by about 15% and the administration staff by up to 30%. The plan will be implemented by the end of this year and would impact jobs across America, Europe, Asia, Africa. One person said. 6 other people familiar with the matter also confirmed Samsung's plan of global headcount reduction. Concerning Dell to carry out continued job cuts throughout the end of the year. When did this come out? Yesterday. Here, Volkswagen could start layoffs in 6 German plants from June 2025. This also came out yesterday, 2 days ago. Then you have this major reduction. Shell is cutting 20% of their workforce to focus on profitability. And now when you look at this shift from 2021, 2022 during the Great Resignation, when there's just jobs everywhere, very high-paying jobs are readily available, now it's very hard to get a high-paying job, but the cost of living is through the roof. You aren't likely to lose a job in the U.S., but you may find it harder to land one. Business Insider brought forward this article saying that Someone applied to 2,200 jobs, and he's ready to give up. 2,200 jobs 3 hours ago, 2 days ago. So the economy is without doubt going through a radical change, and it's getting very hard to get a job that's going to be able to offset a lot of the cost and a lot of the debt load that a lot of Americans are currently sitting in with auto loans, credit card debt, student loans. It's a tough world out there right now for many people. The job market is getting tougher for workers, but they may be gaining in the battle over remote work. Now, when you look at remote work in the past, you could work for 200 grand a year, 100 grand a year, remote, and you would get the same salary. But now what's happening are a lot of these corporations are saying, hey, we can hire overseas. We can hire in Latin America. We can hire in the Philippines. We can hire in these different countries with a lower cost of living, and we can pay them well, based on their standards, their cost of living, and we can save dramatically on cost. And that's exactly what's happening. A lot of American jobs are getting completely outsourced. For example, look at the Yahoo News August jobs report. Shows job loss for U.S.-born workers, gains for foreign-born. It says here that according to August job reports reported by Fox, U.S.-born workers lost 1.3 million jobs, while foreign-born workers gained over 1.2 million during the same period. So you see what's happening. It's a race to the bottom. Dollar store getting crushed sends ominous signs about the U.S. economy. Consumers are tapped out. Expert warns. Struggling dollar store is a sign of bad news for the U.S. economy. It's one of those things you can't ignore, as much as a lot of people would like to, told Fox. It says when you think about it, their target market is $30,000 and $45,000 per year earners. Those people have basically stopped going, or at least stopped spending what they used to spend. Even the CFO of Darden Restaurants, which is Olive Garden, said that they've seen a decent amount of revenues, but that it's from people that make over $200,000 a year. Their target market between $70,000 and $80,000 a year, as far as their customers are, they've dropped off the face of the earth. Even McDonald's is saying they're targeting, before they were targeting people that made less than $45,000 a year. Now they have to target higher income consumers. Everything is clear in the data. High rates are really putting pressure on small businesses. This is worse than September 2007, right before the financial crisis. And so when you look at where consumers are, this is their personal savings rate. The personal savings rate is almost at all-time lows. 2005, 2006, this period was the only time in which, situation was worse in history. But we're walking into, a struggling job market, an inflationary environment where people had a lot of money with stimulus, and that money is slowly getting pulled out. It would not surprise me to see by next quarter us be far below, 2000, the great 2007, 2008 crash. Now, when you look at how much Warren Buffett has sold and what he's doing, it's concerning, right? It's very clear that he believes that there's massive downside coming in the economy. Now, some people could say it's because of the new capital gains rate that may be coming, after the election. It's because of this, it's because of that. Look at how much he's selling. Berkshire sold 5.8 million shares of Bank of America, $7.19 billion. 23 hours ago. Apple stock, he sold 389 million shares, and each share is $221. So 389 million by $221 is $86,299,650,000 worth of stock. That's how much he sold. Now look at what insiders are selling. So Bezos sold $8.52 billion worth of Amazon stock, and this is just this year. So I want to be very clear. This is just this year. $8.52 billion Amazon stock. Rob Walton, the Walton family, Walmart heirs, $1.8 billion. Alice Walton, $1.69 billion. Jim Walton, $1.69 billion. Mark Zuckerberg, $1.59 billion. Additional sales bringing total to $1.2 billion over 4 months. Michael Dell, $788 million. Vince McMahon, $723 million. Anthony Ressler, $541 million. Then you have an Oracle exec, $347 million. Peter Thiel, $175 million. You have Jamie Dimon, $150 million. It's his first sale in 18 years. Leon Black, $172 million. It says billionaire investors selling Meta stock. Also, you have Ken Griffin, you have David Tepper, Jonathan Soros. You have a lot of high profile, execs and billionaires liquidating. Now, you ask here, why? Several high-profile billionaires and corporate insiders have been selling significant amount of stock in 2024, raising questions about the outlook of the market. Here's some key points of this trend. And the list here, they said the reasons for selling is market highs. Market stock and trading near all-time highs, potentially prompting insiders to cash out. Diversification. Some executives may be looking to diversify their holdings as the stock prices increase. And tax considerations about potentially what could be happening. They mentioned here Bezos moving to Florida, but I think it's more of the election. People are wondering what could happen there and what this could actually mean for the many billions of dollars in stock. Now, what I think is going to happen here is I believe we're walking into a scenario, an affordability crisis, the likes of which America has never seen, that's going to be felt by 100+ million Americans, and they're going to stop spending at a lot of these companies. They're going to really pull back dramatically on spending, and as that begins to happen, these corporations are going to continue to slash costs. They're going to continue to move into automation and find ways in which they can provide the same product or service, or a service maybe not as great, but they're going to find a way in which they're going to be able to, for example, a restaurant, they might reduce food quality. They might do things in which they can, still deliver something at a lower cost. They can still increase their profits, but it's going to just change the overall experience for millions of Americans at certain establishments. We're going to see everything, a major shakeup across all industries, and these billionaires, they're getting ready for it. They're getting ready for what I believe is going to be a crash greater than 2007, 2008. And I think it's going to present a massive once-in-a-lifetime opportunity for those that are positioned with cash. You look at Warren Buffett, for example. He sold his Paramount stake. He's like, we lost quite a bit of money. He still wants to get out of it because he thinks it's going to continue going down. What do you think about this? What do you think about all these billionaires liquidating endless stock? Do you think it's because of the potential unrealized capital gains tax that could come? Maybe it's the increased tax on, there's just so many different taxes that are coming after these billionaires. Do you think it's going to be one of these tax policies, or do you think it's going to be an overall shift in the U.S. economy that's going to push us into a recession, some would argue a depression, and they want to liquidate at the top of the market, which many would argue we're in right now? Let's have a conversation about this below. If you'd like to fix your credit to position yourself for funding, maybe you're renting an apartment right now, you want to buy a duplex or a triplex or a fourplex, there's a lot of really great loan programs if you're looking to acquire a distressed asset. 5% down. You can move into one of these units, collect rent from the adjacent 2 or 3 units, potentially bring your living cost to zero. Play the defense. As things start to get bad out there, I think if you play the defense and you can reduce your living expenses dramatically, you're going to do yourself a massive, massive favor. It's going to be he or she who has the debt and has the monthly expenses that they can't hold on that are going to be pushed into the hard spot. But if you are putting yourself in a spot to where you're going to be able to thrive during the hard times, your family's going to thank you forever for that. Let's have a conversation about this. And if you'd like to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call tomorrow. Catch you next video.